Ladies and gentlemen, fellow traders, friends, welcome to the live show on Tuesday, the 14th of July, 2026. We're back. Another fantastic live show coming up for you. We're going to talk about everything today, particularly how I choose my trades. US dollar, Canadian dollar in question. This morning, this was trade of the day, if you didn't miss it. And that's a goodie. That's not bad. I did actually wait for it to get past the prior low before taking it. So, you know, not a bad one. That looks like it's going to work out, and it looks like it's going to work out fine. But I'm going to go into my process today and talk to you about how we actually go through the process of actually choosing these trades and how we go about it. But what we'll do is we'll wait for everyone to get here, and then we'll do that. Then we'll get into how we go about our trading and how we choose our trades. So we'll see you all here now shortly, and we'll get on with it. US dollar, Canadian dollar is working out in our favor though, and it has sort of broken to the downside, which is great news. But oil is also breaking up. Blue Mango, how's it going? Welcome, good to see you. Noticeably, we're back where we started at the beginning of the year. We're going back up on oil, and I suppose the S&P's going down, and you know, the whole 9 yards. We're back where we started. What happened to the peace deal? What went wrong? Perhaps you guys can tell me what went wrong there. What actually happened? Insane when you think about it, but there we go. S&P 500 hasn't fallen down. And you might ask yourself, why is that? Why is it when there's such huge fundamentals in the world going on, these big fundamentals that Iran and Donald Trump are beating each other up and things are happening in the world, yet somehow or another, the S&P 500 manages to hold itself up? Well, it's quite simple, really. Hello, imaginary user, good to see you. It's actually a very simple concept, and the concept is this. Take into account that the amount of shares actually holding the S&P 500 up are actually a handful. It's not the entire market. If you were to look at the entire heat map of the S&P 500, you'll see there's a load of tiny little blocks, and then at the top there's a handful of these giant companies. Meta, Nvidia, you know, all of the big ones, you know, Amazon's up there, Google, for example. And those are the companies that are holding the S&P 500 up. You might ask how that's possible. Well, they are linked to the NASDAQ as well. So the NASDAQ is all part of the game. And the NASDAQ has got basically the Magnificent Seven holding the whole NASDAQ up. So when these big companies do quite well, or they make money, or they're kind of reasonably on the better side of things, then obviously the S&P 500 and the NASDAQ are not just going to go tumbling down. There is a flip side to this though, because when things do go bad, they normally do get affected first, and if it goes really bad, that is, and then they suck everything down, and that's why you end up with these rather big crashes at the end of the day. So when you're looking at the S&P 500, the NASDAQ, and a number of other indexes and thinking, why aren't they falling? What's going on? Well, it's quite simple, really. It's all to do with those bigger companies are basically propping the market up and holding the market up, and they're not getting affected by the geopolitical news or the news outside of the world. And that kind of holds these things up at the end of the day. So, but if you look at, for example, we looked at the UK 100 for a short, and the UK 100 has come down actually quite harsh. And what I see here is the head and shoulders developing here as well. By the way, I'm seeing the head and shoulders pattern all over the market, absolutely everywhere I go. I'm seeing the head and shoulders pattern. It's almost becoming a nightmare. You go to sleep at night, there's head and shoulders floating around you at night. But yeah, okay, so head and shoulders pattern is there. And if this plays out, if it just goes below this level here, it's going to break to the downside, and that also would be quite a decent short. It doesn't always necessarily follow the S&P 500, but they do tend to follow each other around. But the European markets are built on a much bigger basis, and they tend to fall a little bit easier. Hey, LGP, there we go. I hope you're all doing good, and I hope you've had a good one. A few trades starting to move in my direction. Been waiting 3 weeks for that US dollar Canadian. Scary here, but what can we do? It's tough. Oh yes, I forgot you from Iran. Yeah, what's going on? What did you do? What's happening? But you know, at the end of the day, it's so easy to get involved in these things, and for these things to happen, and for you to be living in that country when it happens. I mean, we're concerned on this side, and the oak pops around this corner where we've got the problems coming around here. So, you know, that's not going to be great. But the oil price, as you can see now, because of all of this, has now dodged up into the resistance. And up in here in the resistance, it's now, you know, sucked itself in there. It's going to, well, we're going to see if it's going to break through that. You know, this morning in the members video, I looked at this and I thought, it's interesting. It's at these levels. Will it take the rest of the week to get up to the resistance and then perhaps mingle around there? Perhaps they'll sort things out over the weekend. It'll come down. Wow, when I looked again, it was already in the resistance. So it kind of shot up. So there's a good chance it could break through this and head all the way up. Are we heading for 120 again? Could be interesting. But it remains to be seen. But we'll definitely see. Yeah, that's the thing. Just stay safe. Stay safe. That's such a difficult thing. US dollars AR does appear to be moving to the upside. Does appear to be going that way. There's big green candles moving to the upside. And there's a bit of an undecided one here. But, you know, this is all cause and effect at the end of the day. The ASX 200 hasn't worked out for me yet. It's kind of stuck in this range. Now, I noticed that it's actually bouncing around in this range. And I looked at this and I thought, do you know what? I'm getting tired of this Australian ASX 200 trade, so they're going to get me out of it. What I'm going to do is when it goes into profit and it gets down to the support level, which it's created down here on the 4 hour, I'm going to relook the whole situation. And if it doesn't fall all the way next time, I might just let it go. Because, yeah, it just keeps going back up here, keeps going back up here, keeps going. So it's created this small sort of range at the moment, which is getting quite irritating. And I'm not in the mood for holding the ASX 200 for too long, because it's not in my time zone. And that can be quite annoying when something's not in your time zone. Germany 40 broken back down into its level, pretty bearish as well. And then if you look carefully, you'll see a head and shoulders developing there as well. Let's make it a little bit smaller, and you'll see a biggish head and shoulders developing there as well. So that's quite interesting. US dollar Japanese yen is not going to do well for me at the moment, simply because when strife is going on in the world and things are happening, the Japanese yen is going to struggle to come down. So the Japanese government is going to have to really work hard to get the yen down. So I'm going to be sitting in this for quite a while yet by the looks of things. But at least the US dollar Canadian, the one we took today, is looking a little bit more promising, because there's a big gap between here and here. So I mean my target's down here. So I'm looking at that big gap and thinking there's not much here that can stop it from falling down. It's changed structure. It's broken structure. It's moving to the downside. It's broken through the first support. It's broken through the main support. It's gone past the prior lows. There's really not a lot going for it at the moment as far as bullishness goes. So it does look pretty bearish as things are standing at the moment. And you know, the title of the video was, you know, how do I actually research and choose my trades? What do I do to choose my trades? Well, actually the first thing is not trend. I'm not looking at trend, not at all. Not the first thing, definitely not the first thing. The first thing I look at early in the morning, and before I even start looking at the charts, is what's going on in the world. What's going on in the news? What's really happening in the world? Because that's important for your psyche. It's important for you to understand that if there's a bank going bankrupt, or there's a crash going on, or Donald Trump has tweeted something, or the world is ending, or you need to know what's going on in the morning before you start choosing your trades. So the first thing that you've got to do before you start researching which trades you're going to take today and which trades you're not going to take today is understand what's happening in the world. Now, I don't say sit and watch TV in the morning. It's the worst thing you can do. Don't do that. That's insane. But if you want to, it's up to you. I did it for many years, but I don't see it as a healthy, you know, pastime to be sitting watching news very early in the morning, because it can be quite negative and it can affect your psyche for the day. And you want to remain positive. You don't want to go into a negative mode and start feeling bad about things and, you know, all that kind of stuff. So, because they're quite good at making you do that. These guys that give you the news and stuff are really good at turning your psyche into mush And it happened to me many a time in my life where I've been sitting watching news in the morning and thinking, gosh, the world's ending. You don't want that. So what I do is I go and I read up on the news, rather, perhaps on the Yahoo or something like that, or what's happening out there, CNBC, all that stuff's available to you online. Just go and see if there's any big headlines. Is there anything out there that's going to affect which way you trade today? Because if you're looking at, for example, the S&P 500, which is, always use this as an example because it's the most popular one, and you're thinking, oh, I'm going to go long on this, and then they tell you that the world's ending, you're going to think, oh, maybe that's a bad idea. So that's kind of where, that's what the fundamentals are about. So I'm not talking about small things. I'm not talking about CPI or non-farm payrolls or jobs figures or what news they're going to announce today. That's rubbish. You're not interested in that. What I'm interested in is what's going on in the bigger picture. What's the big picture before you start looking for your trades and before you start deciding what you're going to do with your trades. So for example, today I would have looked at the news, I would have seen things are a bit iffy. And if things are a bit iffy, and if the Strait of Hormuz is closed, and if Donald's making trouble, then there's a good chance the Canadian dollar is going to go down, right? Because the US dollar, there's going to be movement. There's going to be the other way around. So that's what I'm looking at, because when things went well, it went up. So when things go bad, it seems to be going the other way. So that might just be in our favor. So you look at that as well. That's in the back of your mind before you take the trade. Now, all you got to do, now I've got my favorites, as you know. So I've got my favorite trades or trades that I've been looking at over the last few weeks, because a lot of my research is done maybe, I always tell you guys to relax on the weekend, but sometimes on a weekend, you just need to pick out what's happening in the world and what's happening in the markets and just have a look at a few charts and see what's going on. Then I'll pick my favorites out and put them in here. Or sometimes they just happen because we're talking and somebody mentions the Australian dollar, US dollar, for example, and it pops up on the screen and it looks like a good trade. It's a good idea to talk to other traders for that and that alone. For that and that alone is so somebody else says, I saw that, and then you go and look at it and you missed it. And you know why you miss it? Because if you look at this, look how many instruments there are to trade. And this is not all of them. This is just what this broker offers, for example. And another broker will offer you something extra, something different, whatever the case. So there's so much out there that you can trade. And then you've still got your investments and the shares that are available there. And then you're not trading on one market. You're trading on the American market, the UK market, the South African market, some of the Japanese market, the Australian market. So you might be trading on a number of different markets or investing on a number of different markets. Now this leverage trading, I keep it down to indexes, commodities, Forex, crypto, narrow it down, keep the trades as narrow as possible, because you can only manage so much by yourself. Unless you're a big company, it's going to be really difficult to trade absolutely everything. Some people have asked me, do you trade bonds? And I'm like, no, I don't have time. I don't have time to look at all the bonds and study all the bonds and, study this and study sugar and stuff. I can't get involved in everything. So you can only trade so much, but there's more than enough to go around. If you run out of trades on, for example, these trades here and maybe all the ones on the side, and you think, oh, what am I going to trade now? Then, of course, you can easily, of course, go and add something to it, go down the list and look for something else. So then it comes down to looking for the trades that are in place. And then you've just got to train yourself to be able to take your eye and spot, without all the lines on it, spot, where are these resistance levels? What's the trend? Where's the resistance? Where's the support? Just on the 4-hour chart, before you even take it to the day chart. Just spot it. And then take it to the day chart and just have a look at for yourself and see what's going on there. Just look at the general pattern. See what the pattern's telling you. Is it bullish? Is it bearish? Is it going in a straight line? What's it actually doing? Which way is it going? Can I trade this? Is it possible to trade this? Is there a way for me to go short here? Somebody said here now, they've been waiting, 3 weeks for this to happen. There you go. It's happening. Now, what I said to you earlier on in the month was this had broken into a new level. You see? It broke into that new level. Now, you'll remember I drew that line there. I drew that line there because that was the new level that it's in. That's a level, there's a support level there. There's another level below that here, a very important level, okay? But it's in between that now, sort of like a no man's land. So you'll notice what I've done with that no man's land is I've said, well, that was a level that was there that I drew there previously. It's broken back down into this level here. And I'm thinking, okay, I'm going to put my take profit in that no man's land at the end of that no man's land. So if it doesn't want to break down into the lower level, into the proper level, then at least I know I'm making profit. But when it gets here, I'm going to move this away with the hopes that it goes down a bit further. But if it takes that, then it's going to take that out. This is how I look at my trading. And then I take it back to the 4 hour and I say, all right, so I'm on the 4 hour and I'm targeting this level. Really, really simple. So what's the things I've looked for? I've looked for fundamentals. I've looked for support and resistance, and I've looked for a trend and a counter trend, a change in trend. In other words, it's either staying in trend or it's counter trading, and that's what I'm looking for. And then I'm determining the 3 ways that I trade, which is in a range, in a trend, or breakout, breakdown, counter trading scenarios. And if those are available on any particular chart, boom, you've got a trade. You can take a trade. Research doesn't have to take you hours, doesn't have to take you years. Of course, if you're buying a stock, you might want to take a bit longer. But for trading, you're just looking for that trade. Entry point is not as important as managing the trade. How many times have I said, manage the trade, manage the risk, keep the risk the same. Entry points are not the thing that you're looking for. You don't care about entry points. You're looking for the best possible trade. You're looking for the best possible entry, of course. I understand this. But don't base your whole trading scenario on the entry, because the entry is a 50-50 no matter what you do. All you do is you look at what happened in the past. In all probability, it might happen again in the future. Try and get an entry which is reasonable. A lot of people would be scared to take an entry because it's moved already. And they think, well, it's already moved that far. Maybe I'll be wasting my time if I get in there. No, that movement is telling you that it's moving in that direction. It's probably the best place to get your entry. But then all you're doing is looking for a point where you can get into the trade. When it does look like a decent trade, then next thing you just got to look at, is there good risk to reward? Can I make more on the win than I'm losing on the loss? It's so simple, really. All you're looking for, can I make more on the win than I'm losing on the loss? That's the important part before you take the trade. Can I take this trade? Can I afford to take this trade? Can I make more money on the win? Now, one of the things I would have mentioned to you is check volume, but you don't have to. But I don't need a volume chart to check the volume. Basically, if I've got lots of movement on the candle, that's telling me there's movement in the volume, and there's a lot of traders and buyers and sellers getting into the trades as such. I saw somebody asking a question here. Hey, Rob, about this. Where do you look for news about this in the morning? Which platform do you look, or website? Has the news ever been positive in the history of mankind? Well, positive news doesn't sell newspapers. Well, these days, internet news. So you're not going to get much positive news, but that's what you're looking for. You're looking for what's going on and what's happening in the markets. And if anything, if there's been any car crash that's going to affect you in any way, shape or form. There'll always be some form of news, bad news, but the really big things is what you're looking for. What I normally do to look for this news, and you asked which platforms I use, you can look at Bloomberg, you can look at Yahoo, you can look at CNBC. Those are the big ones. I mean, I don't want to advertise anyone or anything like that, but they're so big already. I mean, who cares really? They've got all the information. Google even has got information for you if you want it. But my go-to is actually the Yahoo app. It's actually very good. Gives you a quick rundown on the news and that sort of thing. Very handy. And of course, Bloomberg is also very handy as well. There is a free version of Bloomberg that you can use. You don't have to pay 50,000 Rand a month, but if you want to, you can. And then you get insane amounts of information from them. But yeah, that actually is quite useful. Yeah, there you go. So yeah, that'll be useful to you. Perhaps, I don't know, not everybody's going to want to, watch the news like that. But yeah, so this trade, that's how we chose the trade. That's how we choose, how you get the trades of the day. Every day I'll put the trades of the day out on the posts on YouTube. And you can see them there in the members area. It's there. It's all the trades that I'm looking at and which way I'm going with them. Buy, sell, buy, sell, buy, sell. with that, the video, of course, which I do research. And the reason I do that is because it also helps me, because I'm doing the video and I'm thinking to myself, is this good? Is this bad? Is this the way to go? And that sort of thing before I take the trades. And it's not there so that you can copy trade. That's not what it's for. Coffee with Rob as usual. It's there so that if you're thinking of taking a trade, if you're deciding, you know what, I want to take a short trade on the US dollar, Canadian dollar, I'm really not sure if I want to do it because I've only been doing this trading thing for 3 weeks. And then you're looking at Rob's trade. Rob comes along and says, I'm going short on the US dollar Canadian. You start thinking, oh, well, maybe I'm on the right track here. That's what it's for, really. And then you can sort of compare like what you're doing to maybe what I'm doing and maybe what other traders are doing as well. The big thing to understand here as well is you don't need 5 million trades. You don't need to be trading 5,000 trades a day or anything like that. Of course, unless you're trading on 5-minute charts like this and you're thinking, oh, I got to get in there and buy there and sell there and whatnot and do all this 5-minute trading thing. If you're doing the 5-minute trading thing, then of course, that's a different matter. But if you're a swing trader, then basically you don't need 5 million trades a day. In fact, you could make a huge sum of money, if you really concentrated on what you were taking, what trades you were taking. You only took 12 trades for the year. You could make loads and loads of dosh. In fact, there have been traders out there that have made their entire fortunes on one trade. So don't think that you have to overtrade and you have to take loads and loads and loads and loads and loads of trades every day. So there's not that much work to do. I've seen videos of guys who say, I get up at 3 in the morning and I'm making my coffee and I'm stirring and I've got market preparation to do and all this BS. And I'm like, wow, I've never got up at 3 o'clock in the morning to trade, even when I was day trading 5-minute charts. What are you doing? What are you researching? What are you actually doing? That's crazy, man. You're not going to make more money than the next trader. I can guarantee it. You're not. You know, all that preparation is not going to do anything for you. So all you got to do is understand that you're just looking for any trades that might be available. You know how long it takes me to find these trades? It takes me minutes to find these trades. It doesn't take me hours and hours and hours and hours. And during the day, when you've got nothing to do and you're really bored, instead of dropping down to the 5-minute and 1-minute charts and losing all your money, rather do this. Rather sit and look at the charts that you haven't looked at. Rather go to those charts that you haven't looked at and do a little bit of that research that you would have done at 3 o'clock in the morning, which is not really going to help you in any way, shape or form. So you got nothing to do. You're a trader. You're not busy, unless of course you've got other jobs and things that you're doing. That's a different case. But I'm talking about if you're a full-time trader, you're probably bored, not to mention lonely and bored. So do yourself a favor. Don't get up at 3 in the morning. Gee, that's crazy. You're going to need a nap by 8. No, do your trading, and then you've got your positions in place and you're thinking, well, what am I going to do now? I don't want to go down the beach. I don't want to make Rob's YouTube videos. I don't want to do this or play games or whatever. Now, I'll tell you what I'll do. I'll go and do some research. And you can go and research the charts that are there. And you don't need to create spreadsheets and all that rubbish either. All you need to do is research what trades are on the go, other charts. I mean, you can go in here and you can go and say, well, let's go and have a look at how this one's doing or that one's doing or what's happening here or what's happening there, what's happening on the crypto or whatever the case. Go and check it out. Go and see if there's a trade available for you there. Perhaps tomorrow morning when you come to work, you can open that up and see what that chart looks like. And will that make me some money? That's all you're looking for. And it's not, you don't have to overcomplicate it on a regular basis. So to recap, I mean, what are you doing to look for a trade? To look for a trade like this exact trade that we've got going here. What are you doing to look for that trade? I mean, if you're watching a whole bunch of YouTube videos and trying to find trades that way, that's not really going to help you much. So look, obviously I post for my members every single day in the posts. I post obviously the trades that I'm taking, so that'll help a lot of people as well if they're looking for some information or something that's going on. But further than that, I mean, all you have to do is just go through your list, look at the charts and see what's going on. But before you do that, understand the fundamentals in the morning. Just wake up, understand what the fundamentals are. Go to the Yahoo, go to the Bloomberg or whatever the case, CNBC, check what's happening. You don't have to watch the news. You can just have a quick read up. And then, of course, like I say, all you're looking for is which way is the price moving? Is it going the way I want it to according to the fundamentals in the news? Look for the support and resistance. Go to the day chart, see how that looks, see if you can put the support and resistance in there, come back to the H4, have a look at what you've got. Put a trend in, have a look which way it's trending. Has it counter trended? Is it staying in trend? Is it breaking all the levels? Is it breaking to the downside? Now, what I find, of course, is if you've got more than one confluence telling you to take the trade, then, you know, bully for you, you've got a great trade. For example, it's counter traded, it's broken the trend. It's broken through the support. It's broken through the second support. It's broken past the prior low. It's kind of saying to you, buy me, sell me, whatever, you know, like get into the trade. It's screaming at you to get into the trade. And so many will be still sitting there thinking, should I do this? No, of course you should. I mean, if your system has told you to sell it, then sell it. If your system's told you to buy it, then buy it. It's as simple as that. Stop worrying about the entry. The entry is not important. You're going to get in one way or the other. Just manage the trade once you're in. That's all. That's all you can do with it. You can't do much else with it. And when it goes pear-shaped, just accept that it's going pear-shaped. My US dollar Japanese yen has been going pear-shaped for how long now? And I've just left it alone. It hasn't reached stop loss. Now I've got a sort of resistance developed here, another support developed here, which is rather close by. Now I've got to determine on that, you know, well, why should I get out of this trade? It keeps hitting that resistance. It's created it. Looks like it wants to come down now. Fundamentally, as you know, I've looked at the fundamentals. I know that fundamentally the Japanese yen should be at 150. I know that the Japanese government's going to step in and work on this Japanese yen. So my go-to trade is a short trade on this particular product at these levels, at these prices. I don't want long trades at these prices. I want short trades at these prices. If I look at the S&P 500, I'm thinking, well, with all the things going on in the world, the short trade's probably good. But I do understand that it's held up by big companies. And earnings season has just come in. Earnings season, they always tend to sort of somehow come out with good earnings. They shouldn't be, though, because we've had a tough year. So it might be a bit of a surprise when the earnings come out. Maybe the earnings won't be as good as everyone thought. And that would be interesting, wouldn't it? That would be a different world this particular time. That would be very, very interesting to see. Because like I say, earnings have generally been insanely good. Maybe this time the earnings won't be as good as they were last time round. It's been interesting times. I've got to say, it has been interesting times over the last few weeks, last few months, and with all the strife going on and the wars and what have you, it's been really quite an interesting time. The ASX 200, what I noticed after I went short now, and I've been in it for a while, is it developed this new resistance at the top here, and it developed this support. This is on the 4 hour, so I drew this in on the 4 hour. I literally drew it in this morning's video, and you can clearly see that has developed a level here. So I'm waiting for it just to come back into profit, maybe come down to the support again, and I'll have a relook at this. You know, that my target's down here, but this level, I mean, I took the trade up here. This level wasn't there when I took the trade. Now it's sort of developed itself. So I've got to have a relook at it now because circumstances have changed in the trade, right? So this is no longer the way it was when we started out, which is quite normal for trading. How many of you have noticed that you take a trade and then the circumstances of the trade change as you go? That is going to happen. That's going to happen through time while you're trading. When you come back and check it, suddenly there's a new support level, for example, like this. And that's something you've got to adapt to. And you've got to be a chameleon if you're a trader. You've got to look at it and say, circumstances have changed. This is not looking as hunky-dory as it did 2 weeks ago, a week ago, 2 days ago, whatever the case. You know, when I took the trade, these levels weren't there. Now these levels are there. Now you've got to change your mind. This is a thing that you have to do very consciously, because if you sit and look at charts all day, here you are looking at this chart thinking, hey, you know what? I'm going to take a short on that. And then it starts going long on you and starts going into a loss. You get out of the trade, starts going short again, you get back into the trade, it goes long. Eventually you end up losing 7 times what you expected to in the first place. So you don't want to be getting in and out of the trades. And if you sit looking at charts, you might just end up doing that. You might end up overwatching the trades, over trading. So don't sit and look at the charts all day. Leave them alone. Let them carry on by themselves. Take the trade, take the position, leave it in place. But when you come back and you have a look at the trade after you've been to the beach, after you've been to the shops, after you've been to all the restaurants, or maybe after you've had a few pints, I don't know. Come back, have a look. And if you see circumstances have changed, then you've got to start creating a new plan around your trade. You've got to start saying, you know what, this has changed slightly. It's not quite what it was when I started out, and it didn't quite do what I expected it to, but it is still in a good place. And for example, this now. So what I've done is I've said, okay, I'm restructuring. I'm looking at this and thinking it's not going to reach my target in all likelihood. There's a good possibility of that now, although it could still go through. So what I'm doing now is changing the plan slightly. In other words, it comes back into profit. It comes down to the support level, and then I'll understand that this new support level is now important. There's liquidity here that's developed, right? Probably from this big move here. Probably a supply level. That's fine. I'll look at it and say, well, it's developed this money here. Can it hold it, or will it break through? If it breaks through this, then I'm going to hold my trade, because then it's going down. But if it doesn't, and it starts to bounce back up, I might just say, let's call it quits. We've been in this trade too long. Let it go, walk away. Cheers, goodbye, so long, and thanks for all the fish. You know, that's kind of where you go with it. You got to keep adapting. You got to keep changing those trades to suit your personalities, to see what's happening on the day and how it's going, and if it's working out for you or not. So yeah, it's that's how you choose your trades. Not difficult, eh? Quite easy, and not difficult at all. Is there any questions? You can ask your questions. Drop your questions in the chat and we'll go over them and we'll have a look and we'll see what's going down. So this Australian dollar CAD has also gone back down to support. It's created another head and shoulders. There's a head and shoulders developed here. So this looks more like it wants to go down than up. And now you have a dilemma when you see a picture like this. You see this head and shoulders and you think, wow, I should take a short trade, but there's a huge support level just below it. So your risk to rewards now really, really poor, because if you take this short, it's just going to bounce into the support and it might bounce out of that. And if it breaks that shoulder, the head and shoulders is negated anyway. But keep it in mind before you take a long trade. So for example, if you were thinking, well, I'm going to take a long trade here because it's pretty close to support, maybe I'll make some money, or maybe not. There's a head and shoulders here. So keep an eye on it. Those are the type of trades that you should say, do you know what? I'll walk away from that and I'll leave it alone. I don't want to trade that because it might just give me a headache. That's the best way to look at a trade like that. Just don't take the trade. If the trade's not on, don't take it. Where's the gold? What happened to my gold? Where is my gold? There's my gold over there. Not going well, is it? Now, here's the thing. As I've said in the last couple of live shows, in the last couple of million years, yeah, it's been a while. It's been a while that I've been in gold. I've been in this for quite a while. Thing is, it's will it rebound? Will it break through here and will it go up? This area is narrowing sharply. It's narrowing. But as I've said over the last couple of days, maybe a couple of weeks, that I've been in this trade. After I took the trade, it developed a seriously bearish pattern. It probably was bearish before I took it, but it looked like it was countering. But now it's very bearish and it's remaining bearish. I know that I'm on the wrong side of the trade, but for me, I look at the trade as it's not a disastrous side. In other words, it's not completely gone yet. It's not over. It's not done. It's still got possibilities. And the reason for that is it's actually sitting in the support. So it's growling around in the support level, saying to me, do you know what? We could still bounce out of here and go. And it did it over here. It did it over here. It's bounced out a couple of times. It keeps coming back into the support level to take some more money. Is it strong enough to hold this level? Well, in my little personal opinion, yeah, because, you know, if you look at it, it was all the way up at 5,500. People were calling for 7,000. This is 4,000. Now, when this move started way back when, I mean, she was down here at the 3,000 level, and before that even at 2.5. For it to come all the way back down to 3,000, it's pretty disastrous and pretty bad. It's not going to be a good thing if gold comes all the way back down to 3,000, because then the people that own gold have really made nothing in the last, I don't know how many years. Okay. So when this moved up with this vast move to the top here, everybody thought, well, this is looking pretty good. And now you've had this serious correction. We seriously don't want this correction to be like Bitcoin and to be a 50% correction, do we? We would prefer that it holds this level, and actually starts breaking back to the upside again. It is a concerning pattern. It doesn't look that great, but it would be good for the world if gold could hold itself up here and then perhaps just break to the upside a little bit and go back up. If it comes all the way back down to 3,000, 3,200, not great, not good for gold. I mean, people who have invested in gold or bought solid gold and kept it on their mantelpiece with a view to, oh, I'm protected by this wonderful bit of gold, they're the ones who are going to suffer the most at the end of the day and go, well, you know, this hasn't gone well, has it? You know, a lot of people went out there and bought like Krugerrands or pieces of gold or gold things or whatever the case, because they believed that the world was going to end and that currencies were going to end and they were going to be in such big trouble with us and they wouldn't have any money, so we'll own some gold. The trouble is the commissions on buying real gold and putting it in your pub or in your safe or wherever you put it are extreme. They're insanely high to buy and sell it. And then this happens, and especially for those that ran out and bought it when it was at 5,500, because there were so many people running out and buying it at that level. They were telling me to buy it, and I was like, oh, what for? So many people did that, and look where it's come back to. It's come back down to 4,000. So yeah, those people are going to suffer immensely if this goes down to like 3,000 or whatever the case. That's going to be quite a big loss. And it's going to take a long time. You know, it takes a long time to recover losses in the market. Have you ever noticed that? When you take a loss, it's a lot harder to get that money back than initially when you planned to make that money. Well, it's the same as if you lose half the value on a product. And a product like gold, if it goes back down to 3,000, it's not going to go back up to 5,500 or 6,000 in the next 15 minutes. It's going to take probably more than a year to even think about it. So if it goes all the way down here, those people have lost half the value of their money. End of story. It's going to be a baddie. Afternoon, good to see you. Haha, there you are, the dollar man. I bought 200 grams when was $4,900. Big tier, yes, no, absolutely. There you go. So you're one of those people who got caught by, you know, it looked good to buy it. And you go and buy it, you keep it, and you think this is the place to keep it. And particularly, you know, yourself, you live in Iran. So yeah, it's going to be a good idea, you know, yeah, to buy gold, because it might be a better thing than having currency. So yeah, those people around the world are the particular type of people that end up buying the gold. I mean, even here in South Africa, it's a lot of people. That's why I say a lot of my friends were out there, yeah, we're going to buy gold because, you know, things could go pear-shaped. And but then you buy it at 4,900, and then, you know, if this thing comes down to 3,000, you've lost all that value, and it takes forever to get it back. And you'll know what the commission costs are on buying a real piece of gold. It's quite expensive. It's not cheap. They try. It's so much cheaper just to buy it on the open market. You can buy it on the market, own it, and it's not going to cost you much at all, right? And whereas, I mean, if you don't want to buy it on leverage trading, you can go and buy gold on an exchange traded fund. And that's going to cost you nothing on spot trading. If it's like one-to-one money, you can go and buy as much gold as you want. So you can go and spend the same amount of money that you spent on that 200 grams, for example, on that exchange traded fund. And you can hold that. You can hold that. And then when you sell it, it's only going to cost you a matter of cents to sell it. It's going to cost you nothing to sell it. And all you're going to do is take the loss on the downfall or take the profit on the win. So much better way to invest in gold. Also, you don't have to keep it safe. You don't have to put it in a safe. You don't have to lock it away. You don't have to hide it away. You don't have to worry about anyone breaking into your house and stealing it from you. You know, effectively, you don't even have to look after it. It's in the open market. You've got an exchange traded fund of gold and you own it. What a better way to own anything. That's part of investments, right? So if you want to own something that's going to protect you in the future, something that's going to hold you for the long term, then you want to hold it that way, you know? Unless, of course, you actually believe that the world is going to end completely, in which case that's a different story altogether. If you think the world's going to completely end, then of course you're going to need some kind of physical product, which is completely different. You know, another one, if for example, diamonds used to be a big thing. And if you look at diamonds now, what's happened to diamonds? You know, you can actually manufacture them now, your own. So what's the point? What's the point? They're not going to get any value. And, you know, I remember one of my family members, or my late sister, wanted to sell her ex-wedding ring or something because it wasn't like, you know, a thing and there was a diamond in it. And they started all this BS about the yellow diamond, the black diamond, the white diamond. And yours is worthless because it's a yellow diamond and it's old-fashioned, you know? What? It's crazy. It's insane. So, you know, things like that. So even physical things that you hold can sometimes just become worthless. It's no point in that. So rather buy it on the open market, rather buy an exchange traded fund that you can trade and buy and sell at a click of a button as well. You can just click the button and, I got rid of that. There you go. I wanted to look at Bitcoin, didn't I? So there's your Bitcoin on the H4, breaking down into support, and it's holding on the support level, hanging around here in the support level, and it's not really breaking to the downside yet. Now, we did say that it would go down, and we thought it would go down to 40,000 and keep on, you know, falling and all the rest of it, and it hasn't, and it's been sitting at this level, and there's all kinds of head and shoulders developing on it and whatnot, and it hasn't gone anywhere. Well, don't think that it's not going to go anywhere because it hasn't gone anywhere. Don't get sort of attached to it and think, it's just fine. It's on the support. It's just going to bounce up. Wait, be careful, because it has in the past tended to follow some of the indexes. And I think the reasoning behind that would more likely be because some of the bigger banks and companies created exchange traded funds on Bitcoin and other coins that are stuck in the S&P 500 or part of indexes and things like that, right? So those guys would be affected by the moves in Bitcoin, which tends to give me the answer as to why Bitcoin or crypto was kind of following indexes for a while. If the indexes crash because there's a big problem, then you're probably going to find this crypto will finally do that crash and find its way down to the 40,000 again. So there is still a possibility of that actually falling or going down or not working out for people, right? I laugh at people when they spend so much on real diamonds. If they can make it in a lab, why pay a bunch of money just because it was mined and out? And that's, yeah, no, that kind of is the issue with the diamond thing. But look, to be fair, you know, when my late sister bought her diamond or got it, it was a wedding thing, obviously. Those days they weren't actually mining diamonds, so it was still a thing, you know, those kind of diamonds or whatever. But when she decided to get rid of it already, then it was worthless, you know. You kind of think, what, you know, that's how it goes. But like products like that, so there's no point. I mean, I've had so many friends say to me, I'm going to go and buy physical gold, and I'm like, why are you buying physical gold? No, because, you know, the world's going to end. There's going to be no money. I'm going to need something to barter with or whatever the case. I'm like, all right, if that's your main concern, fine. But understand this. If you're investing in it and you're trying to invest in it and buy gold and say, no, I'm going to buy some, this is a Great British Pound US dollar, by the way. It's just sort of breaking to the downside here. Interesting one. But yeah, if you are just planning to sort of just use it for that, then fine. But if you actually want to invest in it and you want to make some money out of it, then you're wasting your time. The commissions on buying real gold is insanely expensive. So just buy an ETF, man. Just buy an ETF. You don't have to buy leverage gold. You don't have to buy this stuff. You don't have to go and buy a leverage trade, you know, and say, oh, you know, I've got to watch it because I'm leveraged and, you know, I could lose my money and all that. No, buy an exchange traded fund, 1-to-1, own the gold. It's going to cost you a minimum amount, much better, much less hassle, much less worry. I've been talking non-stop since I started the show. How did I do that? Crazy, isn't it? I'm just like going on and on and on and on. You guys must be bored by now. Yeah, I see my plumbers here. We've got plumbing problems today. They need to replace pipes in one of the bathrooms and downstairs. And yeah, lots of going on there. H4, there we go. That's where we want gold. We want it on the H4. Right, so it's in support and it needs to bounce up. And then we got silver. There we go. Where's silver going? Which one of you guys owns silver? I think it was Johnny, or no, was it Kevin? I can't remember who owned silver last month, and they did really well. They did it. They caught this run here. So hopefully you managed to keep that money and keep on using it for everything else. But silver gives you a picture on gold as well, because it's a commodity that's very similar in the way it's invested in. And if I look at silver, it looks to me like there's a level here and there's a level here, and it's kind of bullish. So I'm surprised that gold is struggling so much. But yeah, you know, it depends on supply and demand and who wants it and who needs it. You know, copper was the big thing for many years when China was building everything. They were just buying up all the copper and iron and all that. So it was a good thing to invest in, and everybody was getting involved in it. It was crazy. This has been slowly going down. This is the Nikkei. It's been slowly falling. And if I look at all the indexes at the moment, every single one, if I look at every single index at the moment, what they're telling me is they want to roll over. What they're telling me is something's going to happen. Some catalyst is going to happen. And with all the geopolitics going on at the moment, all the hassles going on at the moment, and earnings season turning up, I'm kind of getting a bit of a feeling, a subconscious note that, yeah, something's going to happen. Something's going to happen soon, one way or the other. So, you know, I'm really thinking about earnings season this time around, because earnings season this time around, last 6 months have been, to be fair, the oil price has been high, things have been going on, and nobody's been looking, nobody's been watching, nobody's cared. But the same token, like I said to you guys earlier, these NASDAQs and S&Ps and whatnot are held up by a handful of companies. And those handful of companies are making a lot of money. I mean, Facebook, better, right? Huge money. That's just from social media. Massive, massive. You know, like the Googles, the YouTubes, things like that. Google's like the one big company. Then, of course, you've got NVIDIAs and all these guys. These guys are making money hand over fist no matter what. No matter what's going on in the world, they're making money. So they're pushing these prices up. So when earnings season comes around, they're not going to go, oh, we didn't make any money. I mean, even Netflix is not small. And, you know, people watch that. It hasn't gone away. It's still a strong company. It's still there. It did take losses, but it's still there. It's still there and thereabouts. Amazon, still big, still there. But did they make as much money as last period? Because companies like Amazon, for example, are a good example of what can change in the market. Because when things are going well, everybody's buying stuff. When things are not going well, people are not buying stuff. So, you know, there's a good chance that a big company like that might give a bit of a worse result. And the thing is, results move price based on expectations. So if you're looking at the index and you're expecting good results, and the results are just slightly less than good, then, you know, it's going to move the markets negatively. It's for example, the positive side. For example, if you're expecting it to go down, it's like if you go to, when you're getting a report card at school and you're expecting an E minus on a subject, and you're thinking, I did really, really bad in that test. And then you go to school and you sit down and they give you a C. I mean, a C is not that great, but it's brilliant for you because you were expecting an E or a D, you know, and you get a C and you think, oh, that's fantastic. That's marvelous. So you buy, and it goes up. That's what's happening. So it's not that it's brilliant, that it's good, that it's fantastic, that it's causing it to go up. It's just that it's better than what they thought it was going to be. Or other way around, worse than what you go in, you think expecting an A plus and you get like a D. It's like, whoa, wait a minute. Off she goes down to the bottom. So that's how these indexes move up and down. So when you see an index moving up and down, it's not necessarily that the world has ended or it's gone really well. It's just that the expectation was different to what was expected. Yeah, right. Okay, so let's put it that way. The VIX is still at 17. It hasn't managed to get down to 15, and I still haven't managed to get into it. US dollar Canadian still, no, there's a green candle coming back in perfectly classic fashion because I'm short and I'm expecting it to go down. But it probably still will go down if everything goes according to plan. Just would like to see this US dollar Japanese yen start to continue on its merry down run now as well, so that we can start getting back into profit again. I need one of these big red candles, one of those big red long ones to come down and start heading down to the bottom here, start making us some dosh again, start bringing some money in. Euro, Great British Pound, still digging a hole like a mole all the way down, big waterfall formation, non-stop to the bottom. Euro, Great British Pound just keeps on going down. I think it's got a lot to do with the politics and what happened in the UK a week or two ago with the Prime Minister resigning and all the rest of it. Any more questions, ladies and gentlemen, that you might have? Where's Elaine? I haven't seen Elaine today. Didn't see Elaine picture. I'm pretty sure I sent the invites out to everyone. And for those of you who haven't joined the social media yet, I do have a Facebook page, and look, the Instagram page, I'm not really good with Instagram, so I'm doing my best there, but that's not going well. So, but then the Facebook page is quite cool. Join that as well. And it helps people. There's one that's called Learns Trade the Stock Market, and there's Rob's Logical Trading. And for those of you who haven't joined the Telegram channel yet, where we chat to each other and try and, you know, give information and whatnot, do so. The link's in the description. Join the Telegram channel. Get involved. It's a bit of fun. I can only take, I believe, on the Telegram channel, I think up to 1,000 people, and we've still got a long way to go. So there's plenty of space. So you can jump on, you know, no problem, and then we can go from there. I think when we get to a point where we've got that many people, then I'll just have to look at who's not there, who's not watching, or whatever the case, and take them off. But for that, until that time, I think we've only about 100 and something people there. So join and have some fun. Have some fun. What are we expecting today? CPI data, as usual. Yeah, you're going to get involved in these news events. CPI data, they're not going to make any difference to you. They're not going to change your world. When I say I come in the morning and the first thing I look at is the fundamentals, I don't mean I'm looking at that. That is so unimportant to me. The CPI data and all that non-farm payroll stuff and all that. It used to be really important to me, but not anymore. That's not going to move the world. That's not going to make my decision of which way I'm going to trade on the day at all. Not even close. Not even close. Not even going to check it out. But for those of you who live by it, you know, you're going to struggle if you don't have a 50,000 Rand a month Bloomberg terminal. You're going to struggle to trade those, because you need lots of reports to understand those reports and to understand what's coming and going and whatnot. And just when you think you've chosen the right direction, it goes the other way. Yeah, one of the ways that you can trade that is if you are sort of trading towards a big news event like that, like an interest rate, a possible interest rate increase, or the jobs figures, or whatever the case. And there's always these forecasts. You see these forecasts down here at the bottom. There's always a forecast amount. So then you can take your trade based on that. You know, like 9 times out of 10, when they release the actual, it's pretty close. But like I said to you earlier on, like if you have a report card and you're expecting an A and you get an E, it's gonna go the other way quite rapidly. So normally they're pretty close though. They come out pretty much the same. But what you can do is like 15 minutes before the forecast comes out, you can kind of dump the trade or move things out either way and work it that way. But yeah, don't try and as soon as the forecast, as soon as the actual comes out, don't try and trade that. A lot of these fund the trader accounts will actually not allow traders to trade within a 15-minute period either side of it, or even an hour period either side of a news event like that. But I've always preferred not to anyway. 15 minutes before, 15 minutes afterwards, leave it. Don't try and preempt it. You're just going to make a mistake 9 times out of 10 and probably in all likelihood get it wrong. It's just what it is, unfortunately. That kind of news, what they normally do is they'll bring it out and you'll think you're on the right side of it and you'll be trading fine, then suddenly you'll get this spike going the other way and you'll wonder why. That's because there's always these revisories and things that have changed and things that were moved from last month to now. They're busy reading the report and these big money traders are busy moving the money around. You're not going to be able to keep up with it. So don't trade these small news events. They're not going to help you in any way, shape or form. They're just going to give you a headache at the end of the day, which is not what you want at all. So the ASX 200 does not want to go down at the moment. Big green candle. That's not going to help me in the slightest. It's just going to give me more of a headache, to say the least. Euro US dollar. This is an interesting one, actually. You know, particularly with the Euro Great British Pound disparity at the moment. The move apart. There's been a big move apart because of what happened in the UK, I suppose. And it's interesting to note that it's broken down, come back in, and it's breaking down again. It looks like it's going to break down and drop off, which is quite serious, to be fair. The Telegram link should work. Actually quite surprised that it's not working. Let me have a look at the Telegram channel here and see if I can get the old link for you guys. I'm not sure. I'm not a big group info managed group great poll. Not 100% sure of how to get these things. I don't use these things. Invite links. Let me just have a look. Copy link. There you go. Just check if that link works. I'm giving it to you now. There you go. That's the Telegram link. Just see if that link works. It should work. I don't see why not. There are quite a few people that have joined. Tell me if that one works. But it should let you in no matter what. And if my link is wrong, then I need to change it, obviously. Somewhere down the line, I need to find a way to change it. So, is there something wrong with my link in the video? That's quite interesting. I'll change it later. I'll try and remember. I see you just joined. That's great. Welcome to the group. So I wonder why that's happening. As there's something going on with that particular link. Well, I'm not going to do it now. And if any of you want to join, the link is here in the chat now for today. And then as soon as this live video is over, I'll go in there and just have a look and see what on earth is going on with the link, because it shouldn't change. I mean, it should remain the same forever. Don't you think? I mean, it's kind of strange that it would change. But these things, but worse things have happened. I mean, you know, I don't know. There's always these things that happen in the world. I'm just going to have a look on it. There's another person who joined. You see, so maybe this, maybe there's something wrong with the link, and that is entirely possible. Let me just go here, and I'm actually going to try and change it now if I can somehow. Don't know if it's going to allow me though, but you never know, because people are looking for the link and then they get the wrong link, and that's not going to help anyone, is it? You get the wrong link. I mean, how's that gonna work for anyone? No, well, why would the link change? Crazy to think about it now. Totally crazy. I'm going in here and I'm going to go and have a look, see if there's any way. I hope this doesn't switch the video off. Don't see why it should. It's going down into the bottom here, and I'm just going to have a look at the link, see what we get on the Telegram channel. Telegram. I'm just going to check this Telegram channel link out, copy it. I'm just going to see where it takes you. Site can't be reached. That's quite interesting. Okay, that's very, very interesting. So I'm just going to get the link again and change the invite link, I suppose, because someone has decided to change it. Crazy stuff. Why do they do that? You know, it's on all my videos now. Well, let's see how that looks. That one should work. So I've actually changed the link now. And if it goes in, yep, it takes you to the channel. So that one works. Okay. Great stuff. Amazing, isn't it? How sometimes these links can just change just like that. And you're like, don't even know how that happened. Crazy, 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 crazy. I'm just going to go in here and change it for my other videos as well. I don't know why they often do these things where they just, you have a link, everything looks great, and then it's just like that, it's gone. Join us on Telegram. I'm just gonna change it here as well so that everybody else also has the correct one in the future. I'm actually quite surprised that that actually happens, but it does. Oh, you're not going to allow me in there now? Why not? For US dollar CAD, I had a trend line on a daily chart and it broke, which is quite useful. Okay, that's not going to allow me to do that now, so I'll come back to that one a little bit later. That's fine, no problem, absolutely no problem. Let's go back to the charts. US dollar, euro, US dollar. Let's go back to the US dollar, Canadian dollar. There we go. Okay, so I had a trend line on the daily chart and it broke. Okay, so there's a daily, there's the trend line. I mean, if you go back to the day, there's the trend line. I actually put it on a line chart, which made it a bit tighter. But I mean, even if I take it, and I put it more to the wicks, it broke it nicely there. And we can take it back to the H4, and you can clearly see that it broke through that clean. So what it actually did, it actually broke through that support 100%. It broke through the second support that I put there, the main one on the day, the line that I drew in, the line in the sand. And then, of course, it went back up, retested, came down, and it broke past the prior lows as well. And that's when I got in. When it broke past those prior lows, those last lows, that last level of defense, I was like, well, I've got to take this trade now. There's just no way about it, no way around it. And that's this morning when I put that in on the video this morning and on the trade calls. You know, you guys know that I put the trade calls in on the posts on YouTube every single day. Those are there, and you can go and find them there. Every day I put a whole bunch of trades together, and you guys can have a look at them. For US dollar CAD, I had a trend line on the daily chart, and it broke. Yeah, okay, that one's good. So those guys who haven't joined the Telegram channel, the link is here, but it is now on this video as well. I believe it should be Hopefully changed, but I mean, okay, at least the link is here now. I didn't know that that link had changed, so luckily we spoke about it now, and I'm able to change it for everyone, but I'm not going to go back and change it on all the old videos now. So it'll be on all the new videos from now on. And gosh, yeah, thanks Telegram. Real nice of you to do that. I don't want a Discord channel. You know, somebody mentioned to me the other day, why don't you have a Discord? We do have one. We do have one, and we tried using it a few months back together. Some of you were here, some of you were not. And it's impossible to use it. People keep copying my image and keep copying my profile and trying to scam everyone. And then they try and tell you that it's me, and they try and sell you things. And Discord went completely crazy. It went off the hill. So no more Discord. Done. We're not doing that. It's too scammy, too spammy. Can't deal with it. That's why I opened the Telegram channel. Unfortunately, Telegram only allows me about 1,000 people on this group, but I don't think we're going to reach 1,000 people quickly, so that's good. We should be fine. Hi Random, good to see you. How many assets do you trade? It's like asking me how long is a string. I trade every asset. So, but like I said, I can't trade everything. It's impossible. And somebody asked me the other day, do you trade bonds? No, I don't trade bonds anymore because it's too much to look for. And I can't trade sugar, and I can't trade orange peels. And if it's tradable, I'll trade it, but I've got enough to trade. There's enough here. So I trade the Forex, and I trade the commodities, I trade the crypto, and it's there, right? The indexes, etc. But also, like shares I use as investments. Those are equity as investment. That's it. End of story. We don't trade equity. We invest in equity. In the old days, when I started trading back in the old days before we had computers, I only traded with shares. We only traded shares, nothing else. And trading shares was great, and it's a lot easier to calculate as well because you know how many shares you need, how much you need to buy, and all the rest of it. That's a really easy thing to do, to trade shares. And if you're a beginner, it's a great way to learn your trade. But what I found is if you start investing, then what you do is you confuse yourself. So now you invest in, say, Amazon, McDonald's, Coca-Cola, and a number of other companies, and you think, oh, those are great investments. And then you start trading them as well. And then while you're trading, you see these lines, and it's like watching charts all day. You see these green lines and red lines, and you think, oh, it's going bad. So what do? You sell your investment. You sell your investment because psychologically, you're convinced that it's bad, or you're convinced that it's not going well, and then it goes up. Now, the whole point of an investment, for example, is set and forget. Leave it alone. Don't do anything with it. And now what happens is, instead of leaving it alone and set and forgetting it, you end up trying to manipulate it and sell it high and buy it low, and you make all these mistakes. So for me, it's a conscious decision to separate that from leverage trading, to separate it completely. There's more than enough instruments, for example, on leverage trading, where you, with Forex and with commodities and with indexes. And I mean, if you were to go down, to example, to the 1 minute, 5 minute, 15 minute charts, you'd only need 3 or 4 to trade. When I traded on 5 minute charts, I only needed 3 or 4 things to trade on. I didn't need the whole list or whatever the case to trade on. It's not necessary. It's not what you need. So from that perspective, okay, but when you swing trading, you've got a whole lot to choose from. So what I do is I have my favorites, right? So these are my favorites, right? These here. And if I can't find anything on there, which is very seldom, then I'll go and have a look at that plethora of products that are available there and see if there's anything there that I might be interested in trading in that week, because I look at it over a weekly basis. Because come to think of it, right, on a daily basis, it's going to take you a while to go through that list if you can't find anything. So, you know, on the weekend, you can spend a little bit of time for yourself and just have a look. But if you don't want to do that, and you don't want to get up at 3 in the morning like some of these crazy people do, get up at 3 in the morning and go and prepare for the market. I've never done that. Like I said earlier, then all you do, because you're a trader, you're probably bored, you're probably lonely, you've probably got nothing to do if you're a full-time trader. So then when you've got nothing to do, and when you're not trading, like at a moment, and you're not watching Rob's videos, then just go and do some research and go and see which ones are good, which ones you want to trade, which ones you don't want to trade. Should I trade that or not? Should I leave it alone? You know, that type of thing, that type of research that you were going to do at 3 o'clock in the morning. Do that now, you know, while you're at work, while you're actually sitting at your desk thinking, ooh, let me watch that chart, and if it goes red, I'll get in and out of it. Instead of doing that, rather leave your trades in place and then go to all the other charts and see if there's anything there that you might want to trade tomorrow or later on, or something else if you haven't got anywhere to go or anything to do, or if you don't have any friends or whatever the case, I don't know, then do that, right? But to spend your whole weekend researching it, or to get up at 3 in the morning and start researching it, you don't need to do that. You really don't. Why are you doing that? And you know, it doesn't take me long to choose a trade. It doesn't take me long to find a trade. If I look at all these instruments, how long do you think it's going to take me to go through these instruments? 20 minutes? You know, it really, I mean, it's a glance. You're going to look at it and say, US dollar, Japanese yen, what am I going to do with it? Oh, it's still short. I'm staying in it. I'm not going to sell it. Right? Oh, I own the ASX 200. Should I sell? No, I'm going to stay in it today. Wait for it to go into profit. My plan is made in seconds. I know I've changed my plan, but it's redeveloped in my mind very quickly as to what I want to do with that. This morning when I chose the US dollar Canadian trade, how long do you think it took me to decide to trade that? It's a glance. I'm looking at it. I've got my support and resistance in. I've looked at it and I've said, well, there it is. Broken, 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 broken. That's a short. Look at that. Look at that. Straight away. Boom. I can see it's a short. How long do you think it takes to take the trade? How long does it take you to take a trade? How many seconds does it take you to go sell? Okay. Not long, does it? It's not long. It doesn't take you that long. So now you're sitting there and now you've got nothing to do. Now you're bored. And you got up at 3 in the morning to prepare your market, or you spent the whole weekend preparing your market. Now you really got nothing to do. Whereas now you can go and sit and look at those charts in the background and see if there's something else or something you want to trade. Maybe mark them up for future reference. Maybe add them to your watch list and say, let me put another chart in here, and then I'll have a look at that later on if I want to take another trade. And as Random and I were discussing on Tuesday, how many trades can you take? Because you don't want to take too many trades based on your account. So for example, Random had a funded account where he took 10 trades and it all went pear-shaped. So maybe you want to take 4 or 6 trades. So, you know, if you're at the limit, then you want to say, well, wait a minute, maybe I should wait till later before I take any more trades. That sort of scenario. If you see a really excellent trade and you're at your limit, if you're 100% sure of it, take it. I mean, just take it. And then maybe if things aren't looking great for the start, maybe dump one of the other trades that aren't going so well. And then you've got more room for that trade. But, you know, there's always that. There's always that option as well. Here's the oil price going to the moon. What do we think is going to happen with the oil price? Is it going to go to 120? Or is it going to turn around and go down here? You see, like I said this morning, I was looking at this and thinking, well, I don't really want to get involved in it now because, you know, the thing is, I've been watching this whole scenario for the last 6 months and everything that's been going on and not going on and that type of thing, and thinking, 1 minute it's up, the next minute it's down. One day he says we're going to beat them up, and the next day he says we're having a peace deal. So it's impossible to call. And I just didn't feel like getting involved in this oil again. I was like, you know what, I'm done with this now. I've made my money on oil. I've actually done quite well. I'm not going to throw it all back now. So this morning when I looked at this and it was around 85 or something like that, I thought, well, it'll probably take all week to get up the resistance and then they'll change their minds. It'll come down again. And when I looked again, it has shot straight back into this resistance here. So it's going to either push through this and push up, or it's going to turn around and go down. We'll just have to see what's actually going to happen with this oil price today and how it's going to go. But interesting though, how it's actually working out and where it's actually going. US dollar Canadian is now a big green candle. So obviously there's been some talking going on and something happening in the background, which is now causing that to go back up again, which is a real pain. You know, it's always the case, isn't it? But yeah, things don't go down in a straight line. And I don't know if you've noticed, but every single time you take a trade, it'll somehow, 80% of the time, try and work on your nerves and go a little bit against you, which is why it's not good to watch charts, which is why it's good to just walk away from the charts and let the charts carry on by themselves. Don't try and sit and watch them, because it's always going to try and just give you a little headache once you've taken it. If you can leave it alone, and just leave it alone and let it carry on by itself, then you're going to be that much better off. You're going to have a much better life, because you're not stressing, sitting there watching the chart thinking, oh, what's going to do now? What's it going to do next? Much easier if you can just leave it alone and let it play out to the plan that you had. See, when you take a trade, you've got a plan. That plan must take effect. So you've got a plan. You say, I'll take my trade and I'm expecting a profit there and I'm putting a stop loss here. That's your plan. The only time you want to change that plan is when things start to take different shape. Like, for example, you look at this and the shape starts to change. I mean, these levels weren't here earlier on. So when I took the trade, there was no support here. Now you've added a support in. So now I just want to reinvigorate the trade a little bit and change it around a bit. So obviously now it's more difficult to reach my target because of this. So now I understand that. So when it goes back into profit next time, I'm going to have another look and see which way, if I should stay in the trade or not. The other thing to look at is, if you see that the trade is going pear-shaped in a loss, then get out of your loss early if you want to. That's fine. Try not to get out of your wins early unless it's absolutely necessary. So for example, with this trade, I might consider getting out of my win early just because there's a change in structure. There's a change in the way the trade is looking and a change in the way the trade is going. It's looking more like this level is becoming prominent, and I might have to deal with this level so as not to sit in the trade forever. So what I might do is say, well, do you know what? Here's the thing. It's sitting in that range. What I might do is say, look, if it breaks down, breaks into that level and gives me a profit, I might take it, right? If it goes back up, I'll take it. And then if it breaks through that level at some stage, take another short and follow it down to the bottom. Something to that effect. That might be the way to look at the trade from here on out. So you can change your plan as you go, but remember you had a plan to start with, and what was that plan? So if you do decide to change the plan, don't go, I'm just going to change the plan now. You've got to consider what you're doing. Why am I changing that plan? What's made me think why I want to change that plan? Well, there's been a lot of changes, and that's what's up for consideration. It's up for consideration as to where that price has now gone, and it's now changed what it was doing when I took the trade. And that's why I want to look at changing the plan there. But otherwise, don't change it, because you had a plan. Stick with it. Then if it goes into the loss and you're thinking, well, it's going to go no matter what, then let the losses go if you can. But if it goes into a positive, then try and work the trade and see how you can get as much out of it as possible. So my plan here would now change. Okay, so my plan here would now go, all right, if I get into this level here, I may well look at getting the profit. And then if it goes back and then it comes back down, if it actually breaks through there again, I may look at getting back into the trade on a breakdown and see if I can make the money all the way down to the original target anyway. But I don't want to sit in this trade for months and months and pay money for sitting in the trade when it's not necessary. Although short trades are cheaper than long trades, I don't want to be sitting in this forever waiting for it to play out when the money can be used elsewhere. So that's when you want to change your plan. The Japanese yen, I'm not really interested in changing my plan. My plan is my plan. I'm sticking with it at the moment. Things have changed on the Japanese yen. It's gone up. It's gone into this range. It is hitting a resistance, a 4-hour resistance here, but it has developed also this, this was the resistance. It is now the support here. So now there's a narrower area that this is trading in between there and there. I am expecting it to go down to 150. This is above my costs, so I'm in drawdown. But what I expect is for this to come down, break through this, break back down, and start heading back down to the 150 at some stage. So I've already sat in this trade. I've already paid for this trade. I've already made a conscious decision to stay in this trade. I'm not going to change that just yet. If it breaks to the upside and really starts going and the things go pear-shaped in the world, I may consider, okay, I'm done. There's a bad luck. But as we stand at the moment, I'm still short and I'm going to hold it until the end of time. Well, the end of time might be next week. We'll see. that all depends on how things go, doesn't it? Will the end of time be next week, or will it be some other time future? We shall see how that goes. Right, any more questions on that? Be quite interesting to see. No, what's the time? It's actually, we've been here for quite a while now, but we're still going to stay quite a bit longer. It's quite okay. We're having a bit of fun here. And I wonder if gold is actually going to break out of the support and start heading to the upside. Let me just have a look. Should we start doing some 5-minute trades here? If you look at the 5-minute, look how that's sitting in there. It's quite insane. It's interesting to see, even on the 5-minute chart, it's developing little head and shoulders here, which is not great. It's not great at all. But what I am seeing is a support level here at the 4,000. The 4,000 is a very important level. You know, guys, if you want to trade lower time frames, I know you do. Some of you want to trade on 5-minute charts, right? Now, I've done this, been there, done that, done it before. 99% of traders lose on 5-minute charts. I mean, 75% lose on 4-hour charts and day. So, you know, the 5 minutes more difficult. But if you want to make it easier for yourself, do this. Look at a trade and say, well, gold is bearish. For me, I'm bullish because I'm sitting in it and whatnot. But it is sitting in a support level here, right? So what am I looking for on gold on the 5-minute charts for the day? Is I'm looking for short trades. So off the support level here, so I would say, well, there's another support level in there. And I'm looking for short trades off of that level because generally it's short. But in general, it could be bullish as well because of this possibility of coming out of this level. So this is maybe not one you want to pick for your 5-minute trading on the day. Maybe you want to look for something else. So maybe you want to look at, for example, oil and say, well, oil is very bullish. Oil is very bullish. It's also come into a resistance, but it is very bullish. So what I'm going to do is on the 5-minute chart, I'm going to say I'm only looking for long trades. And then if I'm only looking for long trades, I'm going to draw maybe a trend line in here, so what it's doing, or maybe draw support in here. Maybe when it gets down to the support level, I might say, oh yeah, that looks like a good trade. So for example, on the 5-minute, I'll just draw in a bit of a level here. So, well, it's actually in the support now. If I get a green candle out of there, I'll buy, and I'll try and target the levels at the top here. But you don't get much to trade. I mean, it's a very small move because it's a 5-minute. But if you're trading 5-minute charts, you know that oil's bullish on the day. So trade long trades. Trade long trades on it because you're looking for bullish trades. You are sitting here with a bit of resistance with it because it's coming into the resistance level, so you might have a bit of a headache there. You might want to look for something that's not providing that headache to you. So then US dollar, Canadian dollar, it's been bearish on the day. There's a bearish move. It's broken through all structures. So if I want to trade that on the 5-minute chart, I'm looking for short trades, right? So where am I looking for my short trades on the 5-minute chart? Maybe up at this level here. There's a good level here. There's also a supply of money right here. So for example, here's some money lying right here, a big supply of money lying at this level here. So what I would do then, this is a good time to trade supply and demand, by the way, if you're trading on 5-minute charts. I'd be looking at this level, the supply of money here, the amount of money there. If it comes into that level, I'll say now it's going to take that money and then come straight back down again. So there's the short trade at 141, 150, somewhere like that, all the way down, back down to 140, 800. That'll give you a great short trade on the US dollar CAD for today on the 5-minute chart. That's how I would trade the 5-minute charts, okay? So that's how I used to trade the 5-minute charts when I sat and looked at trades all day, is I would basically look at the higher time levels, look at the news for the day, look what's happening. I know it's a bearish trend. Don't just look at the 5-minute chart and try trading. Get the higher time frames, get your direction and trade the direction. Then the other thing you want to do, like Random asked, how many instruments do you trade? Don't be trading on 50 instruments if you're trading on 5-minute charts. Trade on 3-4 instruments max, okay? Because 5-minute trades are fast. You need to watch them and you need to trade with them, and you need to trade with them hard. So don't be like going, oh yeah, I'll take like all these trades like we do with swing trading. The reason I trade so many different instruments on swing trading is because swing trading is a basic come in the morning, look at what trades I want to take, put the trades in place, leave them. So I don't need to sit and watch them, and I don't need to have many trades. I mean, with swing trading, I could have 12 trades a year and make a fortune. Whereas with 5-minute trades, I need to have like 12 trades a day. And that's where the problem comes in, is you're over trading. And that's why, you know, it's difficult to trade on those 5-minute charts, because you're trading so much. And most 5-minute traders are scalpers. They're not really doing what we're doing here and choosing a position properly. Most of the time, you're just trying to get profit, get profit, get profit, get profit. The demoralizing part is when you take 8 trades, you win them, the 9th trade loses, and it takes all the wins away. That's the part that hurts. But yeah, if you're doing the 5-minute thing, that's the way to do it. You see it's bearish, you know it's bearish. At the moment, it's a little bit bullish. So you go back to the 5-minute chart. You know that line there, you know, is one candle. You know that. Okay, so it's gone up on that one candle. You know that there's a demand level of money there. It's going to take that money, come down. So it's a good short coming here. Great short trade coming here. You can take the short down to these levels here. That's how I always traded with these lower time frames. Even then, it's 50-50. And even then, I sort of walked away at a kind of break even at the end of all of that. That's why I don't bother with those 5-minute charts anymore. That's not my thing. A lot of people with 5-minute trading will wait for the open and the close of markets to trade. They'll say, I'm going to trade for 2 hours. This is the fun part. The guys come in, I'm going to trade for 2 hours, I'm going to make a couple of $100, and I'm going to go off and have a lovely day. Trouble is, what happens is, when you come in and you trade for those 2 hours, instead of making $200, you actually lose $400, and now you've got to try and make it back. You've got a decision to make. Do I sit for the rest of the day trying to make it back? Or do I close shop like I said I would and come back tomorrow and try and make it? Remembering, if you come back tomorrow to try and make that 400, tomorrow you would have wanted to make 200, you're actually going to have to make $800 tomorrow to make up that 200 that you wanted to make today, because you lost 400. There's a big disparity between making 800 and 200. And if you don't think there is, imagine if you were trying to make 20,000 today and tomorrow you have to make 80,000. Suddenly the disparity computes. Suddenly it makes sense. There's a big disparity between 80,000 and 20,000. There's a big disparity between 800 and 200. It's very difficult to make that when you were trying to make that the day before, which is why that doesn't work either, because the person who invented that system, who said, I'm just going to come in and make $200 for 2 hours and go home, forgot that they could possibly lose. They forgot that there's a chance they might not win. And that's where the problem comes in. They forgot that there's always the possibility that you might not win. And if you don't win, then it becomes insanely difficult to make that money. Do you think trade with order limit or market price? You know, the only time I traded with order limits was when I was not available, and I really wanted to take a trade for some reason or another, or maybe order on a share or something like that. Okay. But if you're going to trade on limit orders, then effectively you've got to say to yourself, I really want that. It's an investment or something. It's something that I really want to own. Okay. I rather just click of the button. I see that take it. It looks good. Let's take it. Right. What you got to be careful of on limits as well. It's a bit like stop loss or whatever the case is. If there's volatility in the market or something happens or somebody says something and it spikes up and then goes back down the other way, it's going to take you into the trade and then it's going to go the other way immediately. And you're going to think, what happened? That's the problem with those types of things. So rather just trade in and just take the order and trade with it. What absolute gold talking sense, no BS and full explanation too. Thanks, Steve. I'm glad you're enjoying it. I'm glad it helps you. Pity there's only a few of you guys that come and watch, but there's a reason for that. The majority of people want to go and watch the actual guys sitting there with 5-minute charts, making lots of money, showing off and that type of stuff, rather than learning something. It's funny that, because everybody comes onto YouTube to actually learn something, to figure something out, or to try and learn something about trading, and then they go and they watch BS and they watch stuff that's like fancy lights and flashing lights and whatnot, and they don't learn anything, and then they keep on losing, and they actually wonder why. It's it's a form of insanity, isn't it? But yeah, I actually, that's the main reason I started making these videos, besides the fact that I was bored, to be fair. But I thought, let me make a video tell you guys about, I think at that time it was about how bad crypto was. I was quite upset with crypto at the time. Blue Mango knows me about crypto. And I made this video, and I made a couple of videos, and it started growing, and I stayed with it. And I thought, well, let me go with it, and let me like show people how it goes and how it works, because I've been doing it for 34 years, and it took the boredom away as well. But I see now, I've been watching on YouTube, and I've seen on YouTube that there's so many people out there that just, you know, that they just go through this process of, you know, you can make $100,000 a day, or you can make so much money trading, which you can't. And they don't want to hear my rhetoric. They don't want to hear me tell you that it's a little bit more difficult than that, a little bit more serious than that. And you need to follow through. Yeah, they're all chasing the coin. Not, you know, it looks great to see the fancy ones and the flashy things and the cars and the money falling out the sky, and you know, all these nice things that they see. It's always, you know, it's I know, I get it. I mean, it's lovely to see it and watch it, and you can watch candles going up and down. If I put this on a 5-minute chart, you can watch the candles moving. That's so nice. You know, that's what people are looking for. They're forgetting that they actually came to learn something. And you know what I find amazing, especially, I'm not disrespecting any other trader. Trust me on this one. I believe they've all got something to offer, and they've all got something good to offer. But it just kind of irks me when I watch it and I see people just sitting there and with the candle going up and down, and then they're not teaching you anything. And then they're like, maybe like, we'll take a trade or not, or whatever the case, on the 5-minute charts or whatever, convincing you to get involved in their course or their 5-minute charts or whatever the case. That's what they spend their time doing. And it's worthless. Yet they've got, you know, thousands and thousands of people that are interested in that. It's quite crazy to me. I'll never understand it, but I guess I just have to accept that that's the way of the world, and that's what it's about. But I don't want to go against my morals and start doing something like that, which is a lie. It's because I'm not interested in doing that. So tough luck for me, eh? Yeah, I know. But yeah, I actually got involved in this because, you know, it's actually, trading's boring and lonely. So you end up looking for things to do, and this is a cool thing to do. But yeah, always tracing the coin, never tracing the knowledge. It's interesting to note, very interesting to note. Okay, so where's my losing trade, my US dollar Japanese yen? This thing needs to move now. It's really becoming quite irritating that it's standing still like this and not doing anything. This is what makes trading so boring, by the way. And what most traders end up doing when they're bored, now that we're on that topic and that discussion, you know me, I just go off on different tangents and trees and whatnot. But so many traders get bored, and then they end up going straight down to the 5-minute charts, because 4-hour trading is really boring. Trading on a day chart is even worse. I mean, it just takes the whole day, doesn't it? So I want to sit and watch charts. So I'm going to go down to the 5-minute charts. I'm going to go and trade it there and lose all my money. Have you noticed that a lot of the funded trader accounts that I've seen out there are trying to force people to trade on these 5-minute charts? They're trying to force you down to 1 minute, 5 minutes, and trying to force you to trade within a certain time period during the day, and take these challenges and what have you. It's crazy, absolutely insane what I'm seeing out there, forcing people to actually trade on those time frames, and they know you're going to lose. They know you're going to have a hard time. Now, if I look at the 4-hour chart here, something interesting. If you trade with supply and demand, and I don't want to confuse you guys, because we trade with support and resistance, right? Okay, we trade with support and resistance and a trend. But if you do understand supply and demand, there's actually something very interesting here, and that is there's a level right here on oil. So is there a possibility that oil could come back down to this level, take the money and go back up? Yes, there is. Of course there is. So keep your eyes open for that. That might just come down to take this money and go back up again. Very, very possible. Very, very possible. And it won't break. It actually won't break this trend, because the actual trend is probably further down here. And then you've actually got another trend that you could use, which would go up there. but it might break the first trend, but it's going to go into here and go back up. It's not going to break the main trend further down on the level. I use trends within my levels, within my support and resistance, because they give me direction. They give me that direction. This is something maybe you guys should pay attention to, is if I'm between the levels like this, there's a support, there's a resistance, okay, on oil. Now on oil, the support is now at 60, the resistance is now at 90, the next one's at 120 or 100. I'll have to check, it's further up. But what I do is I draw trend lines in between to tell me if there's a counter trade, if things are changing around. So what I'll do is I'll draw a trend line down there, which will tell me if it breaks that trend line, that's quite serious. It's breaking down heavily. And then maybe a second one, just a bit of a sharper one, just to tell me if it's breaking the first bit. It just tells me if the red candle coming out of the resistance, because that's what we're trading the red candle coming out of the resistance, just tells me if it's valid. A good example of that is on the US dollar CAD that we traded this morning. US dollar CAD, we traded this morning, right? And my main reason for taking it, it broke through the main support on the 4 hour. That's a 4 hour support, by the way, more than a daily. Although it is on the daily, it's very difficult to put it in there. I actually did put that support in on the 4 hour. I did put that resistance in on the 4 hour. That's fine. You can do that. You know, your 4 hour levels, you've got the day levels. You know, the reason I put the day levels in mainly is because the day levels give me direction. They just tell me where the levels are on the day. That's all I need to know. Okay. Then I can put my 4 hour levels in. And then I've drawn in this trend support. Mine was a bit tighter, but it is now looser, and that's the trend support. So now it's broken the trend support. I also drew in a line on the lows, the main lows, the wicks, okay? Because that support was drawn in on the line chart, which is the closing prices. That support's drawn in on the wicks. So I've drawn in the low on the wicks, and then it broke that. And then there was another low, which it had spiked to. I decided if it breaks that all-time or that all-time prior low, then I know, convinced that it's going the other way. It broke the prior low, came down, took the trade. Bit of a green candle coming up. But then, like I said, if you go back to the 5-minute chart, you can see there's a big level here, a demand of money, which is going to take and come back down again. So I'm not too concerned about that either. So that is the process for taking a trade. That's why you see trend lines in my charts. The trend line's not there as the only thing I trade. I trade support and resistance, but what that does, it just gives me direction within my trade. On this particular trade, I've got 3 confluences. So if this fails, I mean, really not my fault, is it? It's just the 50-50 market. I mean, I can't predict anything. Charts can't predict the future. I can't predict the future. You most certainly probably can't predict the future unless you are actually a fortune teller by trade. I don't know. And so at the end of the day, all I can do is take the odds and say, well, the odds are on that it's going to go that way. So I'm going to take the trade based on those odds that it's going to go that way and follow the trade in that direction. And that's basically what we do. And that's how we take the trades. If there's any questions on how we do that, please ask. Will the NASDAQ lift the S&P 500 up again? Look, what you've got to understand about the NASDAQ and the S&P 500 is the NASDAQ pushes the S&P 500. The S&P 500 is linked to the NASDAQ. So whatever happens on the NASDAQ is in all likelihood, in all probability, going to happen on the S&P 500. Close, not exact, close, right? And as I said earlier, what you have to look at is if you had a heat map on the S&P 500 or the NASDAQ, you'd see this heat map, all the shares that are involved in there, right? And you'd see a whole bunch of little squares, small squares. I don't have a heat map here to put up, small little squares. But at the top, you'd see this handful of big squares. Meta, Amazon, Google, Nvidia, to name a few, that are up there. Big ones, big massive squares. Those are the bulk of the market. And the bulk of the market, I know on the NASDAQ it's 7 shares, on the S&P 500 a few more. But, you know, they're a small percentage of the entirety of the index. So when those big companies move, then effectively the index moves with. And that's why you'll see the S&P 500 and the NASDAQ move together because the same companies are in there, and it's big companies. So if they announce earnings and their earnings are good, no matter what's happening in the world, no matter what's going down in the world, no matter what banks are going bankrupt or what's happening, if those big companies announce good earnings and their share price goes up, the index is going to go up. And that's why when you see the world is all going pear-shaped, and you see things are happening in Iran, and you see all these things going wrong, doesn't mean that this is going to go down immediately. Unless, of course, those big companies are affected and they start to drop off a little bit. I mean, very few of them will be affected seriously by that, because Meta, Facebook, social media, that's making money hand over fist. And it'll make more money in a war if you think about it, because everybody's going to be posting and doing things on that particular platform. Big thing to think about, though, is on a platform like that, fundamentally, obviously, then there's going to be a situation where companies do the advertising. If the company's not making money, then they're not going to advertise, and that company will maybe lose some money. But generally, I think a company like that will do pretty well. But then a company that might not do so well might be Amazon, for example, because they're a retailer of sorts. So if people aren't buying things because inflation's bad or economy's bad or they're struggling with money, then they're not going to buy stuff, so that company might lose value. So, but the thing is, these are always forward earnings. So when people invest in companies, they're looking at what's going to happen in the future. They're not looking at what's going to happen or what happened in the past. They're looking at what's going to happen tomorrow. So for them to invest in Amazon or to invest in Meta or to invest in any of these big products, they've got to believe that tomorrow they're actually going to do better than they did yesterday. Now, if they release results now, for example, which it's earnings season, so they're going to release results now, everybody's expecting them to have done better, because guess what? They always do better. They always just do better, don't they? What if they don't? Now, that's like I said to you earlier. Now, if you go into the school with your report card and you're expecting a C, or if you're expecting an A, and you get a C, you're not going to be happy, and it's going to go down. And that's exactly what happens here. So you come in and you're expecting it to be an A release. You're expecting Meta to come in and say, everything's been great. It's been wonderful. We've made so much money that we're paying you all this massive dividend, right? And then you come out there and they say, oh, well, no, actually things went really bad because we had a war in Iran and things went bad. We didn't make that much money, so we're not paying you a dividend. Things are a little bit tough. We're gonna hold things. We're gonna tighten our belts a little bit. You're not going to be happy with that. Price is going to go down. People that have invested in it with views to what's going to happen in the future, and to take their money out, because that's how it works, right? They're going to pull their money back and say, oh, wait a minute, I'm not putting my money in there. That's not gone well, has it? Because they're looking at what's going to happen tomorrow, not what happened yesterday. This is where the big issue comes in with this particular scenario. So what's happened here up until now is because this was based on what happened in the past. They saw what happened in the past, and they gave good results last time round because what happened in the past was good. Nobody has really looked at what's happened over the last few months with the high oil price, with the inflation and all the rest of it. There's even been talks about they might need to raise an interest rate this year. So with that said, you've got to look at this with different eyes and say, just maybe, these big companies are not going to quite provide the result that we were expecting. And if that's the case, maybe, just maybe, the NASDAQ will break to the downside rather than the upside. The S&P might actually break to the downside rather than the upside, simply because we've all seen that, maybe, just maybe the results won't be that great. But the reason they're holding up, or the reason they're holding up well, is simply because those big companies are pushing them up and holding them up at the end of the day. And if those big companies have good results, then the S&P 500 has good results. And that's why you look at the S&P 500 and you see this tiny little movement here and you think, what on earth? And then you look at the oil, and the oil's like crushed it into the resistance here. That's because the oil is the oil there. And if there's a limited supply, it's going to get expensive. Whereas the S&P, on the other hand, I mean, it's those big companies that are pulling it. And as we are moving into another earnings season, there is going to be cause and effect, which is possibly either going to keep it up or maybe even push it down. It depends what those results look like. So the S&P, look, the S&P 500 is pushed hard with NASDAQ companies, with all these tech companies and what have you. Tech is holding the world up at the moment. These big tech AI companies and whatnot are holding the world up at the moment, and social media companies, Google's and Meta and those types of companies, Nvidia, those are pushing the world up heavily. How do you stop a machine like Google? How do you stop a machine like Meta making money? They're gonna make money no matter what's happening in the world, because that's the communication process that we have now. We all talk to each other on Google and Meta and these different areas, Nvidia's and AI. You know, it's all important to the world now. So whether there's money in the world or not, people won't buy food, but they'll support the Googles and the what have you of the world. So they're going to be profitable. They're going to make money. And then television, Netflix, things like that. People are watching that. People are watching YouTube. So they're going to make money. Where their revenue will get hurt is when business can't advertise with them, because that's where they make their money, with the marketing and the advertising. So that might have a cause and effect somewhere down the line, but I think it's going to take a while for that cause and effect to take place, or to hurt them in any way, shape or form. Cheers, Blue Mango. Thanks for being around. See you on Thursday. We'll be back on Thursday for another live show at 1200 GMT +2. So for those of you who are leaving, don't forget to come back. Don't forget to come and join us and be there. If you haven't liked the video, make sure you like the video. It's really important that you like the video, because it's good to see likes. It's good to see subscribers as well. So join, subscribe, be part of us, be part of the group, the A team or the RLT team. Rob's Logical Trading is what RLT stands for, by the way. Because I wanted to call it the RLT team, but somebody a few months back said, nah, we're going to call it the A team. So, all right, A team it is then. But yeah, it's all good as long as you guys go well. Imaginary user, it's a pleasure. Absolutely. I'm glad you enjoyed it. I'm glad it's been good for you. I haven't left yet. It's just Blue Mango that's leaving. I am planning to leave soon. We've been here a long time today, haven't we? We've actually had quite a long show, and we've been going on and on and on and on, but there's nothing wrong with that. Nothing wrong with that at all. It's been decent, and if there's any questions, I'm quite happy to answer them, because that's what we're here for. We're here to answer the questions. We're here to talk about the markets, and we're here to see what the markets are doing. And we're here to see how you can make a profit. Elaine, happy Tuesday. I asked where you were earlier, because you are at every single live show. It's good to see you. Wonderful. And I wonder if Kevin's here today. I haven't seen Kevin. Blue Mango's just left, because we've been here a long time. I don't know if I should start making this show later. I might do that. We'll see how we go. But at the moment it's at 1200 GMT +2. Rob, I made no money with trading since December 2025. Now, don't get distressed and don't quit just yet. Because here's the thing, Random. Most traders that I know have struggled to make money within the first 3 years. I was very fortunate, because when I started trading, I did not have an issue, because I didn't have computers. We never had cell phones. We didn't have computers. We didn't have any of this stuff, right? So what we used to do is, yeah, you are late, Elaine. That's cool. We're almost finished the show, but it's good to have you on board anyway. Let's just say we didn't have anything like the technology we've got now. We used to dream of stuff like this. So we would buy shares, and the idea was to buy them low, sell them high, rather than the set and forget that I've got now. And in those days, we thought that that was somehow trading. So we were also trading with spot money. In other words, the money you had was the money you could trade with. We didn't have the leverage trading as such. So we were trading basically with the money that we had. It's incredible. Now, can you imagine, Adam, that the scenario where you're one-to-one trading, you're not going to lose money easily. I mean, if you lose 10% of your account, it's insane, right? So the traders of old, like myself, had a big learning curve, and we didn't lose money like that. Then came computers a few years later, and we got involved in it, and it was like a dream come true. And then on top of that, they added leverage trading, and they added all these fancy programs that you see here now that you could use as well, all these charting programs and whatnot. So that became something that we had to work our way through. But as we already knew the game, you know, the only thing we had to learn was that if we lost 10%, we lost all our money, which was, wow, wait a minute, what's going on here? So you just had to like recalculate and rework out the market. It was difficult for most of us to get through that and to figure that out. But we were fortunate enough to get through that. I was fortunate enough to figure that out, get through that, and come out on the other side in one piece. Many of my friends didn't. They woke up on Monday morning with margin calls, and they had to pay and lost all their money and all their dosh and that sort of thing. So yeah, but most of the traders these days that get into trading struggle for like 2 years, 3 years, some of them even longer. So don't think that you're going to get into trading and in the first 3 weeks, boom, you got it, you nailed it, and it's as easy as that. It takes time, because you see, what doesn't make you money are these charts. Win rates don't make you money. Charts don't make you money. What makes you money is having a business plan, having a strategy, and understanding it's all in your head. You have to be patient. You have to get over your FOMO, your fear of missing out. You have to get over your fear. You have to understand that you're going to lose half your trades and accept it. Most people can't. Most people cannot get over the fact that you might lose half your trades. Once you realize that that's what's going to happen, then you can realize that you need to make more on your profits, lose less on your losses. Once you realize that, then you'll crack through and you'll start making it. If you're not reaching your targets, bring your targets closer. Just, you see, you can't take every trade. So if you look at a trade, you put your stop loss in place, and you want to bring your target closer, and you say, I can't make more than my loss, then that's not the trade for you. Look for trades where you can see you can actually make a profit. So for example, this US dollar Canadian dollar trade, I didn't put my profit target down here. I put my profit target up here, okay, where the green line is. Much higher up, right? Because it's a possibility, it can reach that. Bring your targets closer, and then my stop loss is still in a clear place. It's still beyond the prior highs, and it's still in a good spot. So I know that this is a reliable trade. It can make this target. It's possible. You see, if you're not making your targets, put your targets in areas that are reachable, but make sure that you can make more in the win than the loss. Even if it's 1-to-1, it's okay. Just over 1-to-1 better. You don't have to make 2-to-1, 4-to-1, 6-to-1. You just have to make more on the win than you're actually losing. Then you'll get to the point that you need to be at. That's all. Okay. I started trading 2019. I learned trading. I only made $3,000 US. I spent it all on challenges. Yeah. 2019, that's actually quite a long time. 2019, 2020, 2021. Geez, that's 7 years. You're struggling. Okay. Start following the policy. All right. Understand that trading's 50-50. Start understanding that you just need to make more on the wins, lose less on the losses. No matter what system you use, no matter what system you choose, it's always going to be the same. Okay. You need to have the business plan, the understanding that you're going to lose. Okay. And once you understand that, it's going to be much easier for you. What happened to me in 2008, I was actually very, very, very fortunate. A lot of my friends didn't make it. But I've always had a gut feeling for things. And then that particular Friday when things started to go pear-shaped, I just got out of all my trades. I knew it, you could feel it. It just started, things started moving in a really, really, really bad way. So I looked at it on that Friday and I said, it was a Friday, by the way, because it always happens on a Friday, but that particular time I could see that it was going pear-shaped. And it was all happened over the weekend, the whole Lehman Brothers, you know, the whole story. Monday morning when I woke up, I had no trades on the table and I was fine. In fact, I'd taken 1 or 2 short trades on the Monday and it worked out quite well for me. So for me, 2008 went okay. I got through it. And then when it hit the bottom, 2009 through to 2010, I was buying, and I started buying my investments. Okay, those investments that investment portfolio that I'm sitting with, started buying like crazy, buying like mad. Okay, I learned my lesson, right? That you need to invest. Investing's the way to go. But you just think about this. I mean, one of the shares, for example, that I remember looking at was the Old Mutual in South Africa had dropped down to 4 Rand. I mean, that was always trading at 16 to 20 Rand. Okay, I bought it and I owned it forever, right? It's now about 15 Rand or something. Doesn't really matter. It went up quite a lot. Many of my trades, the Steinhoffs, all of them, I bought and bought and bought and bought, and I bought so much stuff. That's what 2008 did. Okay, so while many of my mates didn't make it, I came through unscathed. Very fortunate, very, very fortunate, because it doesn't happen every time. And there was tough times in 2011 as well. As you know, there were tough times in 2020. So yeah, you've got to put your stop losses in place, and you've got to feel it coming on a Friday afternoon. You've got to see it coming. And normally when you start seeing things on a Friday afternoon, you start seeing those red lines, you start seeing things going bad, you don't want to be long on the indexes. You don't want to be holding too much Forex, and particularly the commodities. You can be short on the indexes. This much I've learned, okay? If you're short on the indexes, there's nothing really euphoric enough that you're going to wake up on Monday morning and go, oh crap, things have gone really bad. Normally doesn't happen. If you're short, you could wake up on Monday morning in a serious profit. But if you're long, things can go really south on the short side. So you don't want to be sitting long on those trades over those weekends. When you're sitting long on those trades, you come out on Monday morning, you could be in serious, serious trouble. Yeah, maybe when you're 80, you're going to be profitable. Well, I hope so. You're 38. Okay. No, I'm sure you'll be fine. Look, when it clicks, it'll click suddenly. Okay, so when everything clicks together, it suddenly all happens at once, and then you sort of get this light bulb effect. This is what happened to me anyway. You get this light bulb that comes on, and it says, "This is how you do it." And you go, "Oh, look at that! Wait a minute." And then you're still going to lose. You're still going to lose trades. You're still going to have hard times. You're still going to struggle. You're still going to have moments where you think, oh, yeah, this is insane. But when you get to the realization that there is going to be losses and there is going to be wins, I just need to make bigger wins so that I can balance out the losses and profits at the end of the day on my spreadsheet. As I told you guys, don't be sitting making spreadsheets. But assets and liabilities, if you can work that out and put it together, just like any normal business, then you know that you can start making profits. If you start a normal business, think about it. If you start a normal business, what are you going to do? You're going to go and you're going to work out how much loss you could make, how much profit you could make, what you're going to need to spend, what your expenditure is, what your income is. You're going to work out all those things. You're going to work out how much capital you're going to need to make this business work, and turnover, how much turnover you're going to have, etc. Just do the same with trading, and then try and make more on the profits than you're losing. The losing thing is you've got to understand that you're going to take losses. Assets and liabilities. Assets are just the positive things that you have, and liabilities are just the negative things that you have, the expenditure, okay? So if you were investing in companies, if you're looking at assets and liabilities, assets are the things that they own. For example, properties, cars, good stuff, stuff that they own. Liabilities are the debts, things they have to pay for, the interest rates that they have to pay back, things like that, okay? Losses, staff, they have to pay staff, they have to pay machines, liabilities. But the machines become assets because they hold value, so there's some asset value in the company. So that's an asset, and that's a liability, okay? So just think of it that way, and it'll kind of start to set in as well. Assets are the good things, liabilities are the bad things, right? So you don't want too many liabilities, you want more assets. Assets are the profit, you want to make more profit. Liabilities are the losses, you don't want to make too much of those. Think of a trade. Every time you take a trade, think of the trade. Every time you take it, you've paid for it. You've paid for the trade. So if you're going to risk $500 on the trade, that trade is costing you $500. End of story. There's nothing you can do about it until you start winning. And then you can take it to a free trade, or you can take it to a profitable trade. But when you take the trade, understand that trade's going to cost you that $500. And if you're going to take 10 trades, that you $5,000 in, that you've paid for it. It's like buying something. You own it. You could lose it. Understand that, right? So that money writes it off. You can't use it until such time as that trade goes into a profit. Then it's making you money and you can have that money back. Okay? Once you get out of it. That's how you must look at every single transaction that you do. So if you take a transaction, I've paid $500 for that transaction, or $50,000 or $5,000, whatever you choose, and then work it from that way forward. But anyway, it's been a fantastic live show. I think it's time for me to go now. I've been here for far too long, and this is going to be one hugely long video, I think. Maybe this is going to be one of the longest live shows we've had all year. But I hope we're going to see you back here on Thursday at 1200 GMT plus 2. I think the biggest problem is because we want big profit quickly, oversize and put stop losses close, and then market volatility eventually in the way. As I said to you earlier, Johnny, the big thing to look at is if your profit target's too far away, bring it closer. If your stop losses are getting taken out, put them at a more reasonable area, like an invalidation area, and then that'll be fine. Tywell, thanks for being here. Elaine, thanks for coming late. Random, thanks for all the questions. Always good to chat to you. And everyone else, if I haven't mentioned your name, Imagine User, Blue Mango's gone. Steve, all of you, thanks for being here. It's been good chatting to you. It's been good having you. I hope we'll see you back here on Thursday at 1200 GMT plus 2. Maybe one day I'll try and move the thing a bit later. We'll see, because I see it does get a bit busier. Let me think about that. But on Thursday, we'll keep it at 12. And yeah, till the next one. Keep well. Make lots of money. And cheers. Ciao. And bye.